All right. Well, thanks again for sticking with us. It is surely to be a lively conversation because I've had quite a number of conversations with Noah, and I've never known him not to be candid. So, um, yeah, so when I first got the email asking me to moderate this panel, a panel in Greenwich, Connecticut called Reforming Capitalism, I have to say it felt a little like, for an audience of hedge fund managers and private equity guys, it did feel a little bit like a practical joke, right? So, I mean, why was it important for you to have this conversation here?
Oh, it works. This went on. I've never been to Greenwich, Connecticut, so this is a first for me. Um, I so I grew up in the East Village, and I was a public school kid. Um, you know, good parents, but kind of upper middle class background. But they got me into tennis when I was really young, so I sort of that was the beginning of this life navigating public school life, kind of the wealthiest kids in Manhattan, the not wealthiest kids. So I was just moving between these worlds all the time, and that was sort of like the story of my life as I grew up. And at some point, it hit me that like the concept of leveling the playing field or was really germane to my experience, and that would be the thing I would focus my time on. I think because I got the chance to navigate these different worlds so much growing up. Somebody once asked me, I don't know if you guys have done this, but you know, do you feel like you have a purpose? And it felt like a weird question. Like I was like, I had a purpose, like someone ordained, you know, decided that I have a purpose. But they said, why don't you try to write what you think your purpose should be? And I just sat down and did it. And I wrote Level the Playing Field. And so that was it. And that has been for me with Acorns, which is really about trying to help everyday people save and invest for the future, education, diversification, the opposite of trading. Like we believe investing is and trading are different things. And say, which is a shareholder, it's a kind of shareholder right. It's really about getting people involved in the things that they own. And both of those things for me is like, you know, answer that sort of question of how do you help level the playing field? How do you help do this? Not when you retired, when you decided to get into philanthropy, but as your actual professional purpose and through line in your career.
Yeah, so I guess capitalism, as it's being discussed these days, a lot of people feel the need to defend the fact that they're a capitalist or identify with various other forms of, I guess, market market structure.
Yeah.
So, just personally, would you identify or call yourself a capitalist?
I love this question. I was thinking because we talked about this, like that you have to actually that it's like a controversial thing to have a discussion about what your perspectives are on economics or free markets or capitalism. Like it's just feels like a weird time in society where that's a weird thing to talk about. But I'll tell you, I started my first company when I was 21, so I certainly believe in entrepreneurialism. I'm like the most competitive person. I love the idea of free markets, but I also think responsibility should be built into the fabric and DNA of a company. And I don't think you should discover a sense of responsibility after you've built something that 2 billion people use. And I think to answer the question of like, because this is one thing to say something, but like, how do you actually breed a new crop of entrepreneurs who do that? I think, by the way, young people have that more entrenched in their DNA, but I feel like it should be part of education. That responsible capitalism is what should be pursued. And Acorns is like this company that attempts to stay right in between business and mission. We always talk about how do you balance business and mission? How do you balance mission and business? Without a business, there's no mission. Without a mission, there's no business. And striking that balance is like a every hour task of thinking through the consequences of every decision you make, how much you charge. We're a subscription business. So we actually decided to charge people in financial services a monthly subscription, partially because when things are free, you're the product. There's no such thing as free. And why shouldn't you, as a digital technology company, be able to actually, and a consumer company, be able to charge people? Like there's no shame in that. So we charge people, but then the question is how much? We're talking about our customers are 60,000 household income. Like how much is acceptable? People sort of confront us on, because part of our business is helping people save and invest. Like, what if someone doesn't have enough assets? Are you charging them too much? People start doing the like AUM math, basis points math, which like no human being outside of the financial services industry does. And then the reality is, if you don't, so nobody's been able to serve the everyday customer because they don't have enough assets to charge an assets under management fee. Like our average balance is $1,100, right? How do you build a business that actually serves this customer segment, that allows you to build a business while also doing the right thing? So we charge, it's like $1 a month, $3 a month, $5 a month. We're building a $10 and $15 a month tiers. But back to the question of, it's a constant, I think, discipline to build a company that's going to resonate in the 21st century, to navigate mission and business. And also, I'm sure you guys deal with this. We have a lot of young people in the company who are incredibly idealistic. I'm idealistic too. And the concept of business is often met with, being very clear and transparent about the fact that the business matters, the mission matters, those two things matter in equal parts. I think that kind of message has to be conveyed. And I think young people in their idealism also need to understand that we are a business, and the best way we can deliver our mission is to be a business.
Yeah, and I think in your answer you said responsible capitalism. When we talked in our prep call, it was social capitalist. But does that brand of responsible social capitalism, does it leave profit on the table? And if it does, why should investors care?
Yeah, so we're going public, and I also love this question because we espouse long-term saving and investing for the everyday person. We encourage our customers not to look at the markets every day. In fact, we go to great length to help them do that. We remind them that every downturn in history has ended in an upturn. We try to teach people the virtues of compounding, diversification, and these things. So Acorns is a long-term saving and investing product for our customers, and that's the way we think about the company. We want long-term investors. We want investors who are going to get behind Acorns for the next 10 to 20 years as we build, I think, a generational company. And sometimes that does mean not chasing profits and shiny objects and everything that's hot, every month, every year. Probably not introducing our customers to NFTs, not just offering freewheeling cryptocurrency trading, because that's the thing that the way we're launching single stock and crypto is we're going to allow our customers to customize their diversified portfolios, siphon off 10% of it like a money manager would advise you to do, and then you can add individual stocks and cryptos into 10% of your portfolio. Enabling it for 100% of your portfolio is how you continue driving a wedge in the wealth gap, in my view. So, yeah.
Yeah. Well, let's talk a little bit more about Acorns for those who might not be as familiar. But how do you think you mentioned corporate responsibility, and that's a big part of how you built the company. How do you think Acorns approaches that differently from other financial services firms?
It's built into the business. It's not a marketing tactic, and it's truly built into the business. I think everybody here knows that investing and trading are different things. I also think everybody here, probably a lot of people here, know how to trade, but most people don't, and most people don't have the education necessary to be good at it. And frankly, when you look at the science and the data, obviously, you go back in time, diversified investing is the best way to build a better life for your future. So if you're not providing that as the central investing product, then you're not really helping people invest effectively, in my view. So I think having responsibility and this sense of commitment to customers, helping them do the right thing. 99% of Americans don't have access to professional financial advice. 99%. Like, that's just ridiculous. That's ridiculous. So if you're going to provide financial tools to everybody, you should provide the responsible tools of wealth making to everybody. And it should be built into it's not, my father was in corporate social responsibility. So I grew up around that, but that was because I think the Community Reinvestment Act, the banks did that as a marketing strategy. And now I think it's about building that into the foundation and the DNA of the company and the products you offer, and walking the walk, not just using the language.
Mm-hmm. And you mentioned that you're in the process of trying to go public, but capital markets have been criticized for kind of fueling short-termism, right? And encouraging companies, especially public companies to prioritize profits over people. So as Acorns goes public, how do you plan to keep that social mission at the core of what you do?
Reminding our staff that every downturn ends in an upturn also. So as a shareholder in the company, in Acorns, we are going to be focused on the long term, and I want our team to be focused on the long term. I think we're going to build a wonderfully sustainable, by sustainable, I mean a company that sustains the test of time. And to encourage our team to do the same thing we encourage our customers to do, which is to not get caught up in daily fluctuations in stock price. I don't think you can build a great company if that's what you're doing. I don't know if that's controversial or not, but yeah.
Yeah. So another thing that we've seen is that, step back. Historically, investing, there's been a lot of gatekeeping, right? It's only for people with at least a few $1,000s to play in the market. But Acorns, as Russell was saying, it's opened it up for people who just have spare change, and you allow people to put spare change in the market. And you're just seeing more investors of a more socioeconomically diverse set of investors enter this market. What do you think is going to be the impact of that long term?
Yeah. Well, actually, I think the biggest opportunity in consumer financial services today is the family system. And when you think about the biggest market when you think about the biggest market in the world, it's the family. And when you think about the most underserved segment of financial services, it's the family. And so one of the things that we're incredibly focused on, we just actually last year launched a $5 a month tier that offers a product called Acorns Early, which is helping people really simply save and invest for their kids, family financial literacy, gifting for the extended family. But it's really focused on building a family offering. And then you think about, we're very, very excited about how to build out services and products for the family system, not just like a debit card for the kids, but how do you create a tighter bond between families and money, and between parents and kids, and drive that interaction. Just like you think about setting up our product as a UGMA, setting that up for your kids. But then if you can teach your kids the virtue of adding individual stocks to a portfolio and have that sort of dynamic happen between the parents and the kids, there's such a wonderful opportunity there. And I think one of the reasons it hasn't happened in financial services is because oftentimes in big institutions, divisions are so fractured. People are sort of competing, against one another. And to build a product for the family, you need to have a tight-knit system as a product, which means you need to have a tight-knit culture and team dynamic, right? So we're really excited about the family. And also, if you want to change the future, you've got to get families, parents investing in their kids as early as possible. And we're talking about $5 a day. The difference between $5 a day at birth versus at 18 is $1.5 versus $4.5 million from compounding. So, getting everyday people, setting their kids up as early as possible, and hopefully at birth.
Okay, I will kick it to the audience after that question. Does anyone have any questions for Noah?
How are you staffed now, and how are you capitalized now, pre-IPO?
Staffed as in, how many people do we have?
How many people do you have? What's the distribution of skills?
It's 350 people. It's largely product development. So we actually just went remote, which has been kind of hybrid remote, which has been really cool to hire people all across the country and open up the opportunity for us to hire in every single location. Because we are serving the everyday consumer in America, it's not. I have this kind of vision that we should have somebody in every nook and cranny in America that works for Acorns, because that's American diversity. Is like every city, every town, every state is so different. Every state has its own mantra. This country is so different everywhere. So that's how we're staffed. Our main investors. So we have strategic investors, PayPal, BlackRock, CNBC, and then TPG, Bain, DST, these kinds of investors. Wellington.
But you prefer to go public rather than stay private.
Yeah. We made the decision for a few reasons, and it was particularly impacted by watching what was happening during COVID with the sort of propagation of trading apps. And we were sort of just watching this happen and said, we need to get Acorns into as many people's hands as fast as possible. Both, it was good for the business, but also for society. This is the product people should be using if they want to save and invest for a better future and for the long term. And so we watched like just this kind of sort of fast-paced, adoption of trading products. And we said, this is going to raise the profile. We'll raise more capital. We'll have currency for M&A. And we're doing a program where I'm investing 10% of what I own into a loyalty program for our customers. So the idea of trying to turn our customers into owners, which gets back to the other company I started, I think is a powerful, like you think about our team, every person that works at Acorns is a shareholder. What if every customer was a shareholder as well? And I think that sense of connection to a company. As a consumer company, I don't think people talk about this enough, but your shareholders are your should be your most loyal customer segment. And if you think, the Apples of the world have millions and millions of American shareholders, way more if you count ETFs and mutual funds. So I believe in the power of ownership too, and I want our customers to take part in the Acorns journey.
Noah, how do you do best practices? Who's sort of either peers with you or sort of legacy gen folks? Because you've got some very active shareholders, both strategics and pretty aggressive private equity. So yeah, it was more best practice sharing. Are there industry folks that you get creative ideas on and operational ideas?
I don't know if this is exactly what you're saying, but we often get asked the question of like, how do we think about competition or other people in the industry? And I believe every. Okay. We sort of we're a little bit of a run your own race company, So we've got a very clear vision, and tend to be very focused on how do we deliver on that vision and not necessarily getting occupied with what's happening. At the same time, like we have strong relationships with the behavioral economics kind of community and the academic community, and we've used a lot of those relationships to try to imagine how Acorns does a better job of nudging people to make the right kinds of decisions. And I also the concept of opening up is interesting. Like is there a sort of room for an open platform concept in financial services where people can build on? But yeah. I've never gotten asked that question before.
I think one way of thinking about it.
I don't think that was a very good answer, but.
Is it like a Robin Hood-esque social mission with a Wealthfront-esque business model? Is that a good way to think about Acorns?
Say it again.
Robin Hood-esque social mission with the Wealthfront-style business model.
No.
Well, how would you correct that?
I would say nothing like Robin Hood. I would say
because
diversification, compounding, long term. We don't do trading, And the thing is, by the way, most of our customers are sort of these outsourcers, like eager learn, But we do have customers that want to be more empowered, and I believe in empowerment. And the other thing you see is actually one of the downsides of a passive portfolio is it's harder to educate people because it just happens. So what we're doing is we're the next feature we're launching is custom is allowing people to get active but in a diversified framework, which is back to what I was saying, which is what basically a money manager does. Like if you call your money manager and you say I want to invest 100% of my money in cryptocurrencies, they should hang up the phone. And I hope mine would hang up the phone. So I would say we're Acorns social mission with an Acorns business model. And the other thing about the robo-advisors is they do assets under management. We're subscription. It's transparent, it's simple, it's clear, and I think it's the only way to appeal to everyday consumers. And by the way, the robo-advisors are way higher end, like way upper ends of the income spectrum. I think we're being kicked off the.
Yes, but why don't everybody join me in a round of applause for Imani and Noah. Thank you so much.